Hi guys, and welcome to a brief update on Zoom's first quarter earnings report. This is a continuation on the investment analysis that we did several weeks ago on Zoom. So if you haven't seen that video, the link is right below. Click on it so that you can get a further detailed, more in-depth analysis on the company and the stock. So with that being said, why don't we jump into our screen and see how Zoom performed in the first quarter. So as you can see here, it's no surprise that they beat first quarter expectations. Let me pull up my pen and you'll see that what the street was expecting over here was $202 million, and they came in at $328 million. So blowout quarter on the top line, and on the bottom line, you can see here on a normalized basis, 9 cents, they came in with 20 cents, and on a GAAP basis, 1 cent, they came in at 9 cents. And look, we were expecting this. This was not a surprise. If you recall, for those that were part of that live webinar, when we were doing the stock analysis on Zoom, we noticed that the current situation with the coronavirus, the mandatory stay-at-home mandate by the federal governments, and then employers having employees working from home, in order to maintain productivity, they had to figure out what's the best service or technology platform to get that across. And we got to learn that Zoom is actually that platform, that service that people are now using, and also employers. And you can see here directly from the CEO, one of his comments was that the COVID-19 crisis had driven higher demand for distributed face-to-face interactions and collaborations using Zoom. Use cases have grown rapidly as people integrated Zoom into their work, learning, and personal lives. So this is impacting work, corporate America. It's also impacting education, and also people just interacting with one another. This brings us closer together, and is now becoming an adaptation that you could still work from home and communicate with other co-workers and with your employers in this format. So Zoom is definitely benefiting with what has been happening with the coronavirus. Now, where can you find the information to give you more understanding, and you can do your own research and dissect the information? So let's go directly to the company website. So let's minimize our slide here. Here we have Zoom website. If you scroll all the way to the bottom, you're gonna see that on the footer, under About Us, there's a section called Investors. So if you click on this menu of investors, it'll give you most recent press release, and of course, the first quarter results. So you could click on the first quarter results, and you can read this yourself. You can go through the earnings, the comments. You can see how many new customers they ended up adding for the quarter. I mean, this is astounding. Approximately 65,400 customers with more than 10 employees are using Zoom today. That is a 354% increase year over year. Again, this is a growth story. And for those of you that haven't seen the full investment case on Zoom, go back, read the comments below, and you're gonna find that link to that full case analysis on this company. So the information is right here. Now, the way I like to think about it is go and look at what the street earnings are and apply a multiple, particularly on revenue, because that's what most analysts on the sell side are using to value Zoom. Other analysts on the buy side, which are asset managers working at a hedge fund or at a major institutional asset management firm like a Fidelity, they might look at earnings per share growth. They might do a discounted cash flow analysis and then value the stock that way. But we're going to stick with the sales metric and apply a multiple to come up with an implied enterprise value and also come up with an implied share price. So that looks like this. Minimize this. Here it is on the left-hand side. So what I'm detailing here is what the rest of the street is forecasting, right? This is my consensus number. You can see highlighted in red, this little box is what 21 analysts that are covering Zoom have as a price target. Here we go. And this is $210. Okay, the high level of this valuation range is 412. I'm actually covering it, so let me see if I can move this up a little bit more. There we go. That's a lot cleaner. So you can see the high valuation or the highest price target from the set of analysts covering the stock is $412, but the median and the average is 210. How many analysts are covering Zoom? You can see here the total number all the way at the bottom is 21. So how can I use what the street is expecting on revenue for next year? Next year, you can see here, they're expecting revenue to be 1.7 billion. That is 180% growth. So the way I'm going to use this information is by taking forward revenue. I'm going to apply a sales multiple. In this case, I have right here 36.3, which gives me, when I multiply revenue times that multiple, gives me an implied enterprise value of the company. Then I subtract net debt and I get implied equity value. Then I take the current shares outstanding based on their most recent quarterly report, Q1, which was approximately 295 million. Divide equity value by those shares and I get an implied stock price. So this share price that you're seeing right here of 210, it's in line with what the street has for Zoom. Where's the stock currently trading at right now? Let's pull up the chart. See if I can get it up here. Where is my chart? My application, here it is, at 209. No, 211, and 209 is what I had, so we could do 211. I mean, right now, there's really no major return based on the multiple. So you see here the highlighted cell B19, that is the main driver multiple. Now that multiple is a function on multiple things. It's a function of how fast the company is growing. How many of their free users can they convert into paid users? What about margin expansion? Is the company more profitable next year than where it's at today? So there's a lot of little variables that determine what that multiple is going to be. So that multiple, if you think that the company should trade at a higher multiple because they're growing at 180%, then maybe you think this should be 40 times or even 50 times. And you can see how it impacts my price target, okay, 291. If we look at comparable company analysis, other companies selling a similar product as Zoom, how are they trading on a sales multiple basis? Well, here it is. Column B, you can see we have enterprise value, and column B is revenue. Here are the different multiples for companies like Slack, New Relic, Box, DocuSign, and so on. And then of course on row 29, you have Zoom. Zoom is trading at 74.9 right now on an LTM basis. But the industry is trading well below Zoom. So why is Zoom trading much higher than everyone else? Well, Zoom is obviously the winner. You could see it on the number of subscribers, on the number of companies with over 10 employees that have adopted their application. Also, higher learning institutions, universities are now using Zoom, and also regular average Americans to communicate with their friends and families. They're all adapting Zoom. So Zoom by far is clearly the winner, but do they deserve a 74 times multiple? Again, I give more explanation on that in the full investment case that we did several weeks ago on Zoom. So you may want to go back and listen to our thought process, the valuation methodologies that we apply to come up with a reasonable multiple. So right now, a 50 times multiple, EV over sell, most analysts are going to say that this is expensive. And also other fundamental investors may not pay a 50 times for Zoom. If we had the current multiple, right, which is 74.9, and multiply that by next year's expected revenue, look at this, you get a price target of 439, which is in line with that 412, the highest price target provided by one of the analysts. Now, the question, which is open for debate, is it worth to pay 74 times into the future? Personally, I would not pay 74 times into the future, not right now. The multiple that I would probably apply here would be half of this growth rate, which would be more, actually less than half. Why would I do that? Because the growth will decelerate. You look here, my revenue growth, row 5, that growth is obviously going to decelerate over time. So you're not going to pay 74 times into the future for Zoom. So something that's more reasonable once they get beyond 2020 will probably be something in the range of 35 or maybe 40, right? But that gives you 232, which by the way, the stock traded as high as 223. So this is open for debate. It's more art than science. If you think this has more room to the upside, then you may probably do a 50 times multiple, and this will give you a price target of 291. If we apply half of this for the next 12 months, you can make the argument that, look, revenues are going to grow this year at 180. So if we give half of this growth in the sense of a sales multiple, that would be what? I'm just going to do 180% times 0.5. Okay, and I'm gonna multiply this by 100. We get a multiple of 90. That's way too high. But then that gives you a price target of 528. I think that's too expensive when you compare it to this range. Some people may justify this analysis, but that's for them, okay? If you're a fundamental investor, you might say again that this is too high. I am not gonna apply 50% of that. Maybe I might do 25% of that growth rate. That will give you a multiple of 45 times. Multiply that by revenue, you get implied enterprise value, and then you solve for your price target of 262. So let's entertain this price target of 262. Now let's look at the technical. Let's look at the stock. And if you recall, in the previous stock analysis lecture on Zoom, actually, let's replay it right now so that you can see what I said. Okay, wait for the stock to maybe come back down to this trend, the lower channel of this trend right here. Wait for it to maybe come back here to $150 for another move to the upside, provided that the fundamentals still remain strong. Okay, so now you see that I had drawn an upper channel, right? You can see that the stock is absolutely in an uptrend, and the course of action was, as I explained in that video, was to wait for a pullback, right? We got the pullback right here, and also wait for it to break this resistance level. So you could have bought the stock here, that's one, or you could have bought the stock breaking resistance, that's two. That's it, you missed it. What's the next course of action, or how do I see this playing out? This is the next course of action, provided that we believe the stock has, a $262 price target and they continue to beat expectations. This is how I see this playing out, okay? So you can see that the stock doesn't go straight up. It goes up and then it comes down. So here, goes up, comes down, goes up, comes down. Slightly increases, but you get a slight pullback to the lower range of our upward channel, then breaks resistance, goes up again. We can make the argument or the case that this stock can either come down to support, which was previous resistance up here, right? And pay very close attention to how it performed there, or the stock can continue breaking that support, which was previous resistance, come down to the lower channel and rest here for a little bit before moving higher. So if you're someone that missed the previous move, wait for the stock to come down to around 180, we can say, 181 to 180, or wait for the stock to come down to this area, which would be, let's see, can I get my annotation? Let's see, here, yeah. Which would be around 169. So 180 to 169 would be the place or the area to look at it. So I'm gonna highlight this right here. So this is where you should keep a close eye out on the stock, provided that we get a pullback to this area, right? This is gonna be the area. And if the fundamentals are still strong, the stock will rebound and continue its trajectory to the upside. And if you believe that they deserve a 45 times sales multiple, then you are probably looking at a $262 share price target, okay? So this is how you combine the technicals with the fundamentals. So I hope this serves more as a roadmap or guidelines on how you should systematically or tactically execute your trades. And of course, this is just a suggestion of what may happen. And just look at the trend. Look at the pattern of the stock. And of course, these trends, these patterns, they repeat themselves over and over. They may not be this clear at Zoom when you're looking at another stock, but Zoom has just been respecting this lower channel of the trend, right? In technical analysis, this is known as higher lows. And this is the definition of an uptrend. It's a series of higher lows, and you're seeing it right here. So provided that this continues, this could be another higher low around 180, 170, and this will be the time that I will probably get back into the stock. And if you buy it, you have to assess your risk reward. Let's say if we buy the stock, and I have to map this out as well. Let's say that you buy the stock over here. Let's say I have 170. Well, what would be your stop out? Per my risk parameters, I will give it about 5 to 10 points to the downside. So if I buy it at 170 and the stock goes to 165, I will probably sell it because chances are that the stock can roll over and come back down, right? So that's two cases. Scenario one, it revisits 180, 170, our support area and then bounces higher. Or scenario two, it revisits our support area, but instead of moving up, it comes back down. This is why you need to have your stops in place to protect your downside. And you know that your downside is limited, but your upside is also, it should be higher than your downside. That way your expectancy of risk return or risk reward is positive. It's higher over a series of more trades that you put out there. So I hope this is helpful. I hope I've given you a very methodical step-by-step process on how to really combine the technicals with the fundamentals, and you can have an action plan to execute going forward. So I'll end the session here. I hope this is valuable. And if you haven't subscribed to our YouTube channel, subscribe now, give us a thumbs up, and we'll continue to do more videos like this. And then you'll get that notification for when we publish and update cases on stocks that we're looking at. So with that being said, I'll see you in the next one. Take care.